Well, hello and welcome everyone to the oil and gas webinar. It's May 12th, 2021. We're going to do some housekeeping items here while we get going. We're going to allow our attendees to start joining us. Before we get started though, I do want to let everybody know that we have about, I think it's 5 of us from the Warren Street Wealth Advisors team tonight to share with you a lot of updates. Specifically, the questions we've been getting are a lot about Chevron stock and what to do with it. So tonight we'll cover that and we'll make this available for replay. Without any further ado, I'm going to kick this off and I'm going to ask our panelists who are hosting tonight to go ahead and come off video and join us so everybody can see those beautiful smiles, and we'll get started here right now. So let's just get this moving here. There we go. Some disclosures. Team, if we have any audio or video issues, just let me know, but everything looks like it's running well here. So our disclosures, our phone number, if you want a copy of our ADV, or you can go to our website, warrenstreetwealth.com, and down at the very bottom of that page are our disclosures, privacy policy statements for you. Little strip here. It says, we're in a recession and maybe a smart time to buy. She says, buy. Next person says, buy, are you leaving? Did she get fired? Layoffs, this is so depressing. Depression, we're in a depression. It's time to sell. We hear this all the time, specifically for everybody attending today. It's around CVX, Chevron stock. Should we be buying? Should we be selling? Should we be holding? We are going to help you with that decision tonight. So tonight on the call, we have Philip there, far left, second from the left, Emily, and then Justin, myself, and on the second from the right is Lynn Hansen, our Chevron resident expert. Lynn has worked for Chevron for 33 years, excuse me, and retired to pursue his passion to be a financial advisor. And Lynn has been on our team since 2013, and he's here tonight to tell everybody what they should be doing when it comes to your benefits, retirement, and Chevron stock. So Lynn, I'm going to ask you to come off video here in a moment. And when you do, Lynn is going to be talking specifically tonight about Chevron stock, some trends, interest rates, impact on the pension, diversification, all that good stuff. And if anybody has any questions, we do have a chat feature. In that chat feature, as we're presenting tonight, please ask questions. We will be paying attention to those. We'll answer those questions live. Anybody who's seeing the replay at the end of this webinar, we're going to be giving out our contact information. In addition to that, a link to Lynn's calendar to schedule some time. You can use that link to talk to Lynn about anything it is that's on your mind to do with Chevron stock, retirement, the pension, lump sum annuity, all those fun topics that we're used to talking to you about. Lynn, are you there?
I'm here. Can you hear me?
All right, looks good. So Lynn, what is happening at Chevron right now? What's going on with the people you're talking to who are getting ready to retire, Chevron stock, all those things? What's hot off the press lately?
So a couple of things been talking to people a lot about. First of all, Chevron's peaking a little bit the last couple of months. I think we hit as low as 54 in right around the start of the pandemic, and we're back up to today. I think it closed close to a little over 107. So it's come back quite a bit. Philip's going to talk a little bit more about the stock price and some other things around the stock. So I'm not going to spend too much time on it. The thing that hits me most is if you look at, might want to pay attention to the 10-year chart. That's the one that really says a lot to me. And it just talks about diversification. So I'll let Phil talk more about that. The other thing we're talking about with people is I'm getting people reaching out to me in different ways, noticing that their lump sum pension has dropped over the last few months. That's due to interest rates, and it's probably going to continue. So it's something you need to pay attention to. And if you don't know how to look up your lump sum pension, if that's what you're going to choose in the end when you do retire, then reach out to us. We can help you I can show you how to pull that up and do projections in the future to see what that interest rates might do to that lump sum pension.
And Lynn,
Okay.
just so we're on the same page, lower rates, higher lump sum, vice
Right.
versa. Yep.
Right.
You and Justin were talking yesterday, overheard this, and just real quick before you pass it off here, but didn't somebody just call in with the change that happened last month, and it reduced their amount by, what was the number?
The number was 50,000. I got a call from a client, and they said their lump sum had dropped 50,000, and they asked why. And like I said, it was interest rates, and Chevron adjusts those rates every month. So a different, whatever interest rates do for that month, you'll see the effect into the next month. So it's a good idea to keep track of that. If you're close to retirement, it might help you make a decision. Like I said, this client dropped, and I'm not sure if it was in 1 month, dropped 50,000, because it depends on how often you check.
Mm-hmm.
But from his high number to currently, it dropped $50,000, which is, he's talking about retiring toward the end of the year,
Mm-hmm.
and if he's losing on his pension, it's it could look like you're working for free if you're trying to hold out for the rest of the year.
Right. Good,
So.
good. All right. I think Phil.
Yes, I'm here.
Hey.
I'm here.
All right. Very good.
Ready to talk a bit about Chevron stock. So the past year and a half has been quite a wild ride for this stock. I mean, at the end of 2019, I'm pretty sure there was consensus that we were in the late expansion stage of the economic cycle, but nobody could have foreseen, just a few months later, you'd have this virus coming around called COVID-19, wrecking global markets and certain industries like energy. And at one point, just kind of talk about how hard energy was hit. At one point, you have the cost of storing oil actually being more expensive than a barrel of oil itself. So that was just a degree of how hard those markets were hit. But you can see that Chevron was no stranger to this market chaos. In fact, if you look at the chart on the left and that blue line, which represents Chevron's stock price, you'll see that the percent off high, or the peak to trough drawdown for Chevron, was 56%. Compare that to the S&P 500 in red, that peak to trough drawdown was only about 34%. So I can only try to imagine how hard it was to be a Chevron stockholder at this time, where you're seeing your hard-earned capital just seemingly disintegrate in a matter of days. But the good news is that since then, it seems like Chevron's taken a sip from the fountain of youth, and it's been able to, kind of like Len said, rejuvenate itself to near pre-pandemic levels. If you look at the recovery from the bottom, you'll see that Chevron has actually outpaced the S&P 500 in terms of that recovery. And also year to date so far in 2021, Chevron's having a stellar year compared to the S&P 500. And this is not only because of commodity prices rising, such as oil and natural gas, but also investors are expecting that return to normalcy and for us to approach herd immunity again. So that is definitely driving expectations for demand. So far in 2021, the year has been kind to Chevron stock, and whether or not that kindness will dissipate moving forward is going to depend on a myriad of factors. But on to the next slide, we're actually going to take a longer term view at Chevron stock. So if you look at the rear view mirror, and over the past 5 years, you'll see that Chevron stock has returned about 36% compared to the S&P 500's 126% or so. Let's stretch this period back a bit further out, 10 years. Let's do that one. And if you look at this chart, you'll see that Chevron's underperformance relative to the S&P 500 has persisted, returning a meager 57% compared to the S&P 500's mind-numbing 286% or so. And there's a multitude of variables that come into play here. You have the US being able to pursue fracking and independently supplying or flooding the markets with oversupply when it comes to oil and natural gas. And you also have Chevron being a more mature company, not having the return profiles compared to the top dogs within the S&P 500, such as the Apples and the Amazons that literally created their own industries during this period of time. So, there are a multitude of variables there, but if you feel like, over the past 10 years holding Chevron stock and you felt like it's really gone pretty much nowhere, you'd be justified in feeling that way. Lastly, just to drive home Len's point about diversification, don't leave all your eggs in one basket. And I wanted to illustrate this point using what we call a Callan chart. And this is pretty much a chart with sector returns in the United States. And you'll see that energy, which is highlighted in pink, it has consistently been on the bottom or towards the bottom for most of these periods. So you'd actually be better served investing in another sector or outside of energy. And that really just highlights the benefits of diversification, offering you the ability to lower your portfolio risk while improving those returns. It does give you that type of potential. But now that I've touched on a bit about diversification and Chevron stock performance, what comes next, right? I'll let Justin talk a little bit about that.
Thanks, Phil. So if you have your investment game plan figured out, the next thing to figure out is just what's your overall retirement plan. And so we'll go through what we call a retirement handbook and just some checklist items of things to consider when you're getting ready to start planning for retirement. So I think the first two are probably self-explanatory, which is just having a plan to begin with and knowing that this isn't something you can kind of just take and go with it. You got to kind of plan ahead for this because it's a big decision with a lot of moving pieces. Number three is making sure your retirement timing is correct. And this comes in a number of different ways. So usually we see individuals retire maybe after the first quarter of the calendar year, but they'll use their PTO and vacation time to take a lot of time off between basically the end of the calendar year through the end of that first quarter. But it can also factor into the decision that Len was saying, where if your lump sum is going down in value because interest rates have gone up, then maybe you want to time your retirement sooner than later to kind of lock in the interest rates where they are today, rather than risk interest rates going higher and your lump sum disintegrating more than it potentially already has. Number four is if you want to retire early, and early from the IRS standard is anything prior to 59 and a half. The main takeaway here is that it's possible. Usually the earliest we see people go is age 55. That's when you're eligible for benefits. It's when you're eligible to take from the 401k without penalty. And really anywhere in between 55 and 59 and a half is considered the typical early retirement. If it's something you're considering, we can help you kind of plan around and make sure that you do avoid early withdrawal penalties and that you're making sure you're not missing out on any benefits by leaving a little bit earlier than usual. Number five is budgeting for medical expenses. This is because as an employee, your medical insurance comes out of your paycheck directly. And so your net pay already has that taken out. And so you don't necessarily think about it. But when you're a retiree, you pay it out of pocket. And so you got to basically add that back into your budget as an expense item. That's one that's frequently forgotten because you're not used to paying it. It's usually just deducted directly from your check. Number six is saying goodbye to credit card debt. And really this goes hand in hand with number seven, which is you want to try and clean up your balance sheet as much as possible. So getting rid of credit card or other high interest debt, and then trying to build up some cash reserves or emergency savings so that if you do have some type of out of pattern expense, you know, the car needs a repair, the house needs a repair, you're not relying on a credit card to get that out of pattern expense funded. We'll move to number 8 on the next slide. Is building and keeping a budget. So if you kind of got the debt paid off and the cash reserves built, or if you're trying to get there, either way, a spending plan or a budget is important. And it's really one of the most important things for planning for retirement, because we'll have people come to us and say, you know, they have a well-funded 401k and a nice pension, but we can't really tell them with certainty whether or not they can retire until they tell us how much they need each month to spend or how much they spend each month. So having some type of budget, even if it's just a rough, you know, 15, 20 minute round figure budget, just to get an idea of how much you spend each month is going to be really important in making sure that you have an accurate retirement projection, and we are giving accurate analysis as to whether or not you're got the green light to be able to retire. Number 9 is Social Security. So for this, you can take it as early as age 62, as late as age 70. And your full retirement age is anywhere between 66 and 67, depending on what year you were born. But just know you have options with that. The longer you wait, generally the higher payment you get, but you also have to weigh that with just your family history, health considerations, etc. So something we can help you make a decision on and talk through your options with you. And then lastly here, number 10, investing for retirement, taking advantage of what's available to you. So maxing out the 401k, getting the tax benefits there, being diversified, not being 100% in Chevron stock, because as you see in the earlier slides, it actually ends up being riskier and you have lower performance. So the exact opposite of what you want is you want diversified risk and you want better performance, and Chevron stock doesn't necessarily give you that. So at least not historically. So being diversified and maxing out the 401k are really important steps on finishing up your retirement plan. I'm going to pass it to Emily. She's going to go over some current events and what's happening in both recent legislation and what might be coming in some future legislation later this summer. Emily?
Thank you, Justin. And speaking of retirement, of course, we all know a big factor in how much you get to spend in retirement. Retirement depends on how much you get to keep after taxes. And along those lines, we've seen several new pieces of significant tax and retirement legislation over the last few years, specifically the Secure Act of 2019 and the new Secure Act 2.0, which recently made its way through the House Ways and Means Committee. Both contain several new laws or potential changes to laws surrounding retirement accounts and retirement savings. And I'm just going to cover a few quick highlights that impact all of our clients. A lot more to talk about with these pieces of legislation. But number one, the RMD age, and RMD stands for Required Minimum Distributions, and that's the age at which you have to start drawing from your retirement accounts. It was recently raised to 72 after being at 70 and a half for decades. Secure Act 2.0 further raises the RMD age to between 73 and 75 over the next several years. There are retirement contributions known as catch-up contributions that an employee can make after age 50. Secure Act 2.0 significantly boosts the amount of catch-up contributions that employees can make if they are starting to save to their retirement plans late in the game. They're going to have a lot more options. Secure Act 2.0 also allows for more Roth contribution options and actually requires Roth contributions in certain cases in retirement plans. So these are just touching on a few highlights from the original Secure Act and the new Secure Act 2.0, which is not official yet, but that the bill does have bipartisan support. So we do think some version of it will pass as it makes its way through Congress. This is all to say this can be an especially strategic time to partner with a trusted advisor to make sure that you are taking advantage of new tax laws as they pertain to your situation. I'm going to turn it back over to Carrie now to discuss the services we offer here at Warren Street Wealth Advisors.
Yeah, thank you, Emily. We love giving away advice on these calls. We've been doing this for years, and Lynn came to us many years ago after attending a couple of retirement planning webinars in the El Segundo area, and saying that a lot of the advisors would not share how they earned money, what they charged, and that's a bad sign. So if you can't find a fiduciary, transparent advisor who can very simply and in simple terms explain what they charge, and then we suggest you look elsewhere. So here it is. This is what we charge. This is under our friends and family pricing. It's a program we've been doing for about 3 years now, bundled group pricing for up to 5 families. If you come in without being referred to us, which does happen, but traditionally all our clients have been referred, but sometimes we do start with just one. At the bottom there, you'll see we start at $125 per year, billed on the first 500,000, and then the more money you have, the cheaper it gets. So on the next 1.9, next 3.75, next 5.6. It's not that uncommon for a 5 families to be, retired from Chevron, between the 401k and the cash balance plan, average family, somewhere between maybe $600,000-$700,000 all the way up to $3 to $4 million a family. And so you can see at, 4, 5, 6 million in group bundled pricing. This allows us to not have to spend money on advertising and to stay competitive with the Vanguards and the Fidelities of the worlds who offer a discount advice. But the nice part for us is we're a small local privately run shop that takes really good care of their clients. So that's my piece there. Wealth design. This is our planning process. So if you wanted to be a financial, I'm going to back up. We also have a program called 401k Assist. So some of our clients just want a 401k allocation, And so what we're able to do is link their 401k account to our performance reporting software to be able to monitor our clients' 401k for them on a daily basis. It does not mean we trade daily, but they do call us and say, how am I doing? What's happening in the markets? How's that affecting my portfolio? And this gives us our entire team access to be able to see our clients' 401k. So if you work at Chevron, let's say you're 47 years old and you're not near retirement, but you need help with your 401k, it's $400 a year, and we'll build you a custom allocation based on your goals, objectives, time horizon, and risk tolerance. And then we'll monitor that for you, and we'll make updates and check in with you quarterly to see how you're tracking towards your goals. And that's the a la carte 401k assist. Planning process starts with 6 steps. The first one, we're going to actually, I'm going to ask somebody to share the link in chat if you don't mind. If you want to schedule some time to talk to Lynn, it's via Establish. There it is right there. It's in chat. So it's the go.onesub.com, Hanson Establish. That's a free complimentary call with Lynn Hanson to discuss anything you want. And it's via phone, Zoom, or in person, whatever you're comfortable with. And that's your opportunity to ask for some specific feedback on how you're doing, maybe some things you should change, and then ask further questions about the services that we do provide. Should you decide to move forward, we go down through 2 through 6. And this is a real process that we implement daily for our clients. On the back end, we're big on tech. Obviously, with last year, we've been remote for quite some time yet, but we do rely on technology to provide solutions for our clients. And the reality is, in an hour or two talking with our team, we can get a pretty good idea of who you are, where you are today, what's probably getting in the way, and some recommendations. But obviously, being financial planners and we're so detail oriented, we do like to rely heavily on data. And traditionally, our Chevron clients, being engineers, appreciate that data and like to see how things are made. So we just like to give you a little sneak peek here on the back end of a plan. Same thing for investing. We don't rely on gut. When we make investment decisions, we rely on data. And what we do is we manage in-house. We do manage our own investments in-house for all of our clients. 3 core portfolios. It's a global stock portfolio, global bond portfolio, and a global real asset, also known as kind of as a diversifier. Hopefully, they have kind of equity-like returns and volatility, but they act a little bit different, hopefully, right? Different time as far as returns to zig when, say, stocks are zagging, if that's even a word. But we want them to act differently than our global stock position, but provide that equity-like return. Our core principles down there at the bottom help us build these portfolios, maintain these portfolios, and make all the decisions around them for our client. And then we take these 3 and we build a custom portfolio for our client based on a risk spectrum from far left, low risk, to all the way to the right, high risk. So if you wanted to be all global stock, we can make an all global stock portfolio. If you wanted to be all fixed income, 100% bonds, we can do that as well. So there really isn't anything that we can't create. The neat thing about what we do is that any given day, if data was to deteriorate, we wanted to make it a trade decision, we can execute a trade for every single account, for every single household, regardless of account size. And that's something that you traditionally don't find in a small firm like ours with 9 people. So we have some very advanced tech to be able to allow us to do, and the reason why we do this, it's in the best interest of the client. We are not day traders. We do not have a high volatility or high volume of trading, but we do rebalance often. We do have tactical shifts, overweight, underweight, that we do implement for our families. And it's just nice to know that we do have our, a hand ready to go if we need to become defensive and maybe generate some cash for some clients in some uncertain or bad times. So we offered it up earlier for questions. So if anybody has any questions now, you can throw them in chat. If not, you can reach out to us. Again, in the chat link right now is a link. It's actually to Lynn Hanson's live calendar. So you can go in there, you can book time for a phone call. Lynn, you can nod or come off mute, but it's phone call, in person, or via Zoom webinar or Zoom meetings. And if you want to, you can also call in. A real person does answer the phone. So it goes to 3 different people on our team. And so if you want to call in and ask to schedule some time, most likely Eileen or Veronica would answer right now if you called. And finally, our guarantee is we promise to put your interest first, and your free 30-minute retirement consultation is your chance to discuss your real retirement concerns with a real advisor, no strings attached. We're not going to try to hard sell you in anything. It's a very small world, especially at the El Segundo refinery. And Len has spent 33 years working there, an additional almost 10 now as a financial advisor after he retired, to keep his reputation strong. And we do not plan on changing that anytime soon. So feel free to reach out to us. We're happy to help. Team, I'm going to wrap it up here. Any last items we need? Are we good? And get some thumbs up and we'll wrap this thing up. Good, good. Len says good. Awesome. Well, thank you everybody for joining. We look forward to hearing from you and we wish you all the best of luck. Take care. Bye-bye.